How's it going, everybody? My name is Antonio, and today I have longtime friend and sponsor of the channel, Mr. Stewart, on the barbecue. Stephen is the CEO of Orecap, previously Orefinders, which is now a unique company in the natural resource space, in that it's not only an exploration company anymore, they are also an investment corporation. So it's going to be an interesting conversation. We'll be hearing more about that in a second. Now, who's not here with me today, though, is your financial advisor. This is going to be a conversation that's general and impersonal nature, and it will include a lot of forward-looking statements as well as discussions about highly risky investments, as the natural resource space is inherently risky. So please visit setter.com and use the company's official documents as well as the advice of a licensed professional to make any and all investment decisions, because the minimum risk of investing in pretty much anything is 100% risk of capital. That all said, Stephen, glad to have you on the barbecue for the first time because it's a new channel, but glad to speak to you again. And thank you for investing your time with me.
Oh, very happy to be here and the CEO Barbecue, Antonio, and very happy to introduce Orecap, which is a new name, rebranding, refocused on special situations. As you say, it is very unique. I don't really think there is anybody in the junior market, call it publicly traded juniors, that are doing exactly what we're doing. There's certainly, it's kind of like a private equity model in a sense, but look, we'll get into the more details there. But I'm very excited to answer your questions and tell investors and your viewers what we're up to and how we're going to set ourselves apart.
Yeah, pleasure is all mine. I'll try to make this as structured as possible because I know you might want to reuse it. And I will go through sort of my 10 Ps, which is my research model process, if you want to call it, when looking into a company. I'll probably have them up on the screen right now with the timestamp so people can come back to it and use that. First things first, I normally start off with the first P, obviously, which would be the pitch. So let's say we met in, I don't know, in a dog park. You have two dogs. You're walking your dogs. You know, we meet each other, and I ask you, "Hey, what do you do?" What would you tell me to put it more structurally and get me interested?
Sure. So Orcap is focused on special situations within the critical and precious metal space. And I define a special situation as something quite simply, it's a problem we think we can fix with an active approach and some investment. And an active approach means we're not passive investors, so we're not going to invest in private placements and keep our fingers crossed. We're going to invest in companies where we think there's an opportunity to add value with our skills, approach, the introduction of capital, etc. So that could include anything such as a management change. That's something that we've had experience with in the past. We've done that with Mistango. We're doing that with Awale, which is closing today, in fact. And so that's a perfect example of an opportunity where we can add value by putting the right people in place. Another opportunity is projects. You know, we always go back to people, projects, and capital. If we can find the right project or divest the right project and put it in the right hand to monetize it, to again allow that company to focus on where they're going to get the best ROI. That's something that we're interested in. And we're interested in turning around broken balance sheets, if you will. I think right now the timing is right. I don't think we're at necessarily the bottom. I can't call the bottom, but I can tell you we're close to it. And that presents all sorts of situations, call it corporate distress, where people are unable to raise money. And I think we are able to raise money. A, we have a balance sheet, and B, we're able to go out there and raise additional funds for situations that we deem viable. So I think we've raised about $80 million since 2020 across our group, and that's just demonstrative of our ability for people to trust us with their capital and then deploy it effectively. So that's, and then there's opportunities you can expect us to do additional, call it incubation of companies. So spin-offs, whether that's assets within our existing portfolio or whether that's physical assets we acquire from call it a target company. So maybe we're not taking over or investing in the company. Maybe we acquire an asset that they're not focused on in exchange for some cash or other consideration. And we see an opportunity that maybe they don't. And we put the right team in place and we spin it off there. So there's all sorts of different ways we can create value. Again, it's an activist approach. We're not passive investors. This is something that I and my team have been doing for many, many years under Orefinders and other companies that we've incubated and started as a part of the OR group. But Orecap is really the manifestation and just the signal to the market that this is where we're going to focus on in this particular vehicle. It becomes sort of the mothership of the OR group, and a really powerful tool, I think, when you factor in that we are at near cyclical lows for the entire junior space. So there's an opportunity, I think, if you have the fortitude and the guts to invest when nobody cares, because nobody's caring in this market at all. Like it's, you have to be truly exceptional to be getting a share price appreciation, which to me is a market signal. So if you can invest intelligently at that point in time, and even in the concept of that all boats will eventually rise. So I do think there's just sort of call it a beta opportunity to invest right now with patience. But if you can add an activist approach where you can enact change, the alpha that one can achieve in this market on top of the beta can be substantial. So really that's the philosophy is invest at cyclical lows and then leverage that by knowing that the cream will rise to the top in this junior. So you have to be very selective about the particular junior you invest in, and that's our approach. We've been doing this for a long time. Me and my team live and breathe this industry, and I like to think that we know it as well as anybody, and we follow it very closely. We know the players. We know what we like. We stay in our wheelhouse. We're very focused. I think we're good allocators of capital. We're patient. We invest ourselves. We don't get involved with monkey business of the pump and dump promotion. We certainly promote our wares, but we do it mostly ourselves because we think that we are the best people to tell our message. And we've invested very heavily in our YouTube channel, for example. And you hosted OR Day, and that's a product that we created a number of years ago, which was an in-house product inspired by Elon Musk and his battery day, and just something that we can utilize to A, set ourselves apart, and B, get ourselves in front of interested parties into this industry.
I hope our dogs didn't run off. We're going to go chasing after them later. But this is the first P to pitch. I'm going to talk about or ask about most of these things here. I hope all of them, actually. But just before we do that, moving on to the next P, which will be the primary metrics. Talk to me about your share registry, shares outstanding, warrants, strike, terms on those warrants, insider ownership, who else owns your stock, stuff like that.
In terms of how many shares do we have outstanding in Orecap, we have just under 250 million. So it's pretty substantial amount there. I don't believe in rollbacks. It's not to say we'll never do a rollback, but I hate rollbacks. They destroy value unless you pair it with a monumental shift or change in business or transaction, etc. We have very low options out. In fact, we're way under optioned. I think as for our company bylaws, we have a 10% rolling option plan, which is standard. Like almost every junior has 10% rolling. I think we've got about 4 or 5% of options out. So all of my team is under options, and I'm going to change that because I want to keep everybody very well motivated. In terms of warrants, we don't have any. So we haven't financed in about 2.5 years, which is exceptionally rare. That is largely as a result of the deal that we did with Kirkland Lake, now Agnico Eagle, who have been funding all of our exploration assets, over and above our various equity positions. I think we have 4 equity positions, substantial equity positions in companies, but we also have a basket of exploration assets. Again, that it not being not very little of our own capital is being allocated towards that with the Agnico deals. So we have done, I think, a very good job at managing our capital, which is so important. As I said, that's one of the 3 things we focus on: people, projects, and capital. You have to own your assets. I mean, the whole philosophy is that there is a serious bull metal run coming. I feel it in my guts. That's not empirical, that's anecdotal, but I just feel it's coming. The only thing is I don't know when. But when it does come, you need to own your assets. So you always say you need to put yourself in front of the wave and make sure you're in business. And so that's why you need to own your assets, and you have to have enough capital to stay in the business for when it does turn. So that's a core part of our philosophy.
Who owns your stock? Who owns your assets?
Who owns our stock? Okay, well, our largest shareholder is Agnico Eagle. They have 10%. They're a shareholder. The other shareholders who own our stock, of course, Mr. Eric Sprott, very famous in this industry, very influential. Osisko Royalties is a shareholder. Myself, I'm a shareholder. I own what do I own? That's 7-8 million shares, something like that. All cash, by the way, not a single free share in Orecap paid. And I'm going to be buying more in the not too distant future because we are trading at, cash or enterprise value, probably maybe even below that. I don't know. I pay very little attention to our day-to-day share price because price means very little. Only when you're buying or selling, it's really about, I focus on value and value and price. There's a huge disconnect and no more so exaggerated than in the junior industry where it is completely inefficient.
We're going to meet the team. So have Charles, Gerry, and Joel waiting here in a second. You just said something that was interesting. You said you're all about value. And I guess I'm all about value too as a retail investor. So where the value comes for me is when you start making money, basically. So what I'm trying to understand here is how does Orecap make money? Like you said, you're long-term investors. You do not sell shares yourself. But is Orecap going to do that, or like how do you monetize everything that you've got going on?
Yeah, well, look, for speaking to me, eventually I'm going to sell shares. I can't pay my rent through shares. But look, just as a general philosophy, I have actually never sold a share in any company I've been involved with. But eventually that will change. But I think that just speaks to I'm not a pump and dumper. I don't create these companies and get seed round investors and then dump them on the back end. That happens in this industry. We don't do that. How is Orecap going to make money? Well, Orecap is not going to have quite the same philosophy as me. It will buy and sell when it sees the right opportunity. I think what you're going to see is principal protection is going to be a core focus of the business. So if we invest $1 million, we're going to want our $1 million back first, and then expect us to have a little bit ride, if you will, whether that's upside in any residual equity positions or warrants, etc. So we'll have a fairly risk adverse approach to our principal protection, and then but we definitely want the upside, and we want substantial upside for our returns over and above that, whether that is equity upside on the share price appreciation, warrants, or other securities or means of making money. So in terms of what do we look for, I mean, we look for 10x. We in this business, we don't look for 10% returns. If we don't see 10x, we don't get interested. I mean, given how risky this industry is and how many things can go wrong, first and foremost, the call it the global macro situation is the biggest influence on this industry. So, and who knows? I mean, my tea leaves, don't fall any different than yours, and I don't read them very well. So, that's always a risk that we sort of have to absorb. But notwithstanding all the call it the project micro risks, if you will, related to the company and the people and the projects themselves, and the jurisdictions that we deal with. But yeah, so we look for 10x, which requires patience too. So there'll be a mix of protecting our principal so that we don't have to go back to the market. I mean, it's not saying we'll never go back to the market, when the opportunity aligns, but it's really about preserving our capital structure, and giving us exposure to 10x type opportunities.
Let's hope that works out for you. I guess I have more or less the same approach. But what would I have to do with any of that as a retail shareholder of Orecap? Like, how would you return capital to me if I were to become a shareholder right now?
Well, we have Orecap has actually issued 2 dividends in its history in the not too distant past. We dividended out shares of our first spinoff, which was QC Copper. Shareholders got 5 million shares. We dividended directly out at a zero tax base. That's very important for dividends. And we rinsed and repeated the same model with American Eagle, who just announced a big deal with Teck Resources. Again, we dividended out at a zero tax base 5 million shares of American Eagle. I'll note that the company, Orecap, kept 5 million shares for its balance sheet in both instances. So we benefited, Orecap benefited 10 million shares in both instances and dividended 50% out directly to shareholders. So I like that model. I think shareholders, I've heard many, many times, shareholders love receiving a dividend. So that's one particular way, but ultimately it's about share price appreciation. I mean, that's why people invest in a stock. It's about investing in us now at 4 cents or whatever we are, and hoping that we go to 40 cents. That's how you'll get paid, Antonio.
Okay. Let's hope it is. Of course, you need to make money. You need money to make money. I was gonna say you need money to make money in this industry, but now that I'm thinking about it, in my cafe business or whatever, you need money to make money almost anywhere. So where's your money going to come from? Where's your capital going to come from? Because you have some right now. Do you need some anytime soon? And how do you see that developing?
So in terms of where we're getting capital, we're fairly strong balance sheet right now. We've got 4 million on our books, and then we've got roughly equal. Again, I don't know the mark to market, but we have roughly the same amount of value in equitable securities, whether that's Mistango, American Eagle, QC Copper, and soon to be Awale. So we don't need money right now, and I'm not really keen to raise money at these prices. So I think what we're going to do is, I think this is a show me market. So I think we've gotten a lot of calls about Orecap, and some people who I really like and respect, and said, you know what, this is the right thing at the right time, great move. But it's a show me market. So people want to see us transact. People want proof of concept. And then we got to educate. We got to go out there and tell people what we're doing. And then hopefully we can get a little bit of traction. We're not going to raise money just because. We're going to raise money on a transactional basis. So if we see the ability to raise money at 10 cents and deploy it in an opportunity that can present perhaps 15, 20 cents with some optionality, those are the types of the ways we'll deploy capital. Really, it's all about trying to identify smart, unique, niche opportunities that very few people can do in this industry because of our just expertise, call it that.
Definitely. I guess this will have to do it for the pitch. We have the primary metrics, the pitch, and we're going to have to move on to the next P, which would be the people. You've hired a new person here. I've got Gerry here to talk to me as well. But I guess it makes the most sense to start with the CEO. So you yourself, Stephen, what kind of a person do you think it takes to lead this type of company to where you'd want to see it? And why do you think you're the right man for the job?
Well, I'm effectively the founder of the company, and that sort of de facto makes me the right guy for the job. Now, whether investors agree with it or not, we'll have to see. But you have to live and breathe this industry in order to develop the ability to identify these opportunities. It doesn't just come to you. You have to, as I said, just live and breathe it and have your finger on the pulse. And that's something that I do. I suppose I've fallen in love with this industry, and so that's where I invest my time. I don't watch movies. I don't go to too many events. Some might say I don't have much of a life, but I do. But my spare time is devoted to following this industry, and just my nature is to identify opportunities. I guess I'm entrepreneurial. I think that's safe to say, just given the amount of companies we've created. So I just see opportunity, and the capital markets and being a public company allows me to spread not just the risk, because doing everything with my own capital, would be impossible, but also be very limiting. So I can spread the risk and offer the upside to my investors. And my investors, it's all about relationships. I mean, there's lots of retail investors. We have probably thousands of retail investors most of whom I don't know, but a lot of whom I do. And that's I think that's so important, is maintaining relationships with investors, whether they're in for $5,000 or $500,000, because we have a little bit of everything. So I mean, I think that in effect qualifies me for the job. I'll say that in this industry there is a low bar, to qualify as a CEO, which is part of the challenge of this industry inherently, because there are so many of us. And I do believe that there are too many of us, too many juniors, too many projects, too many salaries, and which is part and parcel, again, of what Orecap is all about, is trying to consolidate those opportunities and maybe eliminating some of those people. And so that is part of the opportunity. Again, is the inefficiencies. So again, going back to why I think I'm qualified to do that, because I'm well aware of the inefficiencies. I see them all the time. I'm very frustrated with the industry and how it operates, and its bureaucracy and inefficiencies. And I'm just trying to build a better mousetrap for me and my shareholders, and do a good job. I mean, failure is, as I've said many times, failure is almost the expectation, if not the norm in this industry, and you have to accept that. And shareholders need to understand that, and that's what all the forward-looking statements and why you open up all your interviews, because this is a risky business. So investors need to understand that they shouldn't really invest too much in the penny stock. Look, we are penny stocks, which by very nature is very risky. And again, as I said, we don't go for 10%, we go for 10 times return. And so that goes hand in hand with the rewards we seek. But you're going to lose more times than you're going to win. But when you do win, you're supposed to amortize your losses. And you can be good at doing that if, to use a Rick Ruleism, is you go with seriously successful people like a Ross Beaudry or many, many others. Don't mean to just pick Ross, but, Ross has done it many times. He knows what he's doing, and he can mitigate the risk. There are definitely things you can do to mitigate risk. They say that one in every 10,000 anomaly becomes a mine. And that's probably true, but if you know how to weed out the obvious non-starters, then you can substantially reduce that, right? So I mean, I think within the OR group, we've got multiple mines. Like I'm convinced that within our portfolio, there will be many assets. How many we'll see, but many assets that have a real chance at being a mine. Whereas if you were to extrapolate that view over call it the TSXV or the CSE, it is 1 in 10,000. I believe that. But if you can have the right people, that starts with the geology, but also, again, people, and you have to have the money to move these things forward. If you can sort of, get the right recipe there, you can substantially reduce that 10,000 to 1. I mean, to the point where it's fictitious. Yeah. And again, bet bet with a guy like, Ross Beaudry. I think we have the ability to be, as good or better than anybody. I mean, that's a bold statement, but I think that we have ambitions to do that. We're certainly not that yet. But that is a goal. It's a lofty goal. We have to do things right. We're gonna make mistakes, but we will move forward.
So this is why we're going through this checklist. This is sort of how I try to mitigate my own risk. And here's the thing: when it comes down to you as a CEO, and it might sound biased, and it is because Orecap is now a customer of my consultancy company. I like you, have met you, know you for a couple of years now. One of the main reasons, I guess, why I liked you when we first met was your work ethic. Like you just said, you don't have much of a life. Like I like that when it comes down to business relationships. I don't want you to care about the NFL. But you're involved in all companies that make the org groups, and that's 5 next to this one, so 6 total. You have a kid, you have 2 dogs as well, and your wife, which I assume is a greater engagement than the sum total of the previous ones. But you're always working. You're answering my emails on a Sunday and holidays and so on and so forth. And while I like that for my personal business connections, I'm still wondering how you're able to deal with all of that and still perform for Orecap shareholders. So how are you going to be dealing with all of those things, as well as looking at new properties and judging new opportunities for Orecap?
And don't forget, I'm involved with the young mining professionals, which is part of the answer, and something that I spend a lot of my free time devoted towards, particularly the scholarship fund, which has evolved into part of my solution. Which, again, not to beat the horse, but people. I can't do it alone. Orecap or group. It's not me. It's representative of my team. The team. They're not my team. It's the team. I happen to lead it, but everybody fills very important roles. And without them, and without my ability to delegate, I first identify who can handle specific challenges and delegate to them, and then monitor and follow up and work together. That's what it's all about. It's no different than let's just say Mark Bristow. I mean, look at Mark Bristow. I mean, think about, our group as a company, as a whole, even though it's not, it offers investors an opportunity to invest distinctively in nickel or uranium or copper or gold. But effectively, we're all the same people, and one could consider it as a company where Bristow's got projects on, I don't know, 4 or 5 continents. He's got 10 mines. What's the difference? Okay, the corporate structure is obviously under one, and you buy one share price and so on and so forth to get exposure to Mark Bristow and Barrick. But he's busier than me, and he pulls it off. I mean, he's one of the best, if not the best, in the industry. But effectively, that's how I view it. It's just running the business, and obviously my time is divvied up based on where the particular focus is. So every day is a little bit different. Every week's a little bit different. Sometimes companies don't need my focus that week. Sometimes they need all my focus, and I suspect that's true whether Mr. Bristow is busy in Saudi Arabia with Reki Dick. Or whatever it's called, or in Nevada, sometimes there's problems he's got to address, but he's got a whole suite of lieutenants, just like I do, that can man the fort and maintain constant communication with, which is critical.
Good teams are expensive though. So you say the team that you've built, how much is that costing? I mean, maybe you can talk to me about in terms of G&A and now that you're moving to Orecap from ore finders and taking on people like Gerry here, how much more is that costing you? And what is the plan there for your guys' paychecks? Or is that going to go up? Is that going to go down? Like, how do you see that? How do you manage the cost of having a good team? Basically, is what I'm trying to ask here.
Well, I would say throughout, I would say just with a rule of thumb, our standstill cost in each of our companies is about 50 grand a month. Okay, and that ebbs and flows based on all legal transactions, etc. Like the legals would be the big variable, and then of course, obviously, a drill program would be a big variable. So any legal costs would be deal dependent, and for a situation like Orecap, I would expect our legal bills to be higher than say American Eagle, for example, but American Eagle is going to have higher drill costs. We are working towards similar goals, i.e. creating value, but doing so in a different way. As I said, our standstill, just costs of doing business, which includes audits and I mean, you name it, and salaries and people. So it's about 50,000 per company, put it that way, which I think on a unit basis is as competitive as good as anybody in the industry that actually works and moves things forward. In terms of people, I think, and how do we do that? Because we can spread our costs. So we have an office in downtown Toronto. It's not cheap, but we split it 6 ways. Look at Joel. Joel works. CFO, cost. He's not cheap because he's really, really good, but it's split 6 ways. Baseload wouldn't be able to afford Joel, a guy like Joel, if Baseload was a standalone entity. And that's part of the value of the platform that we've built, is that we can not only pay people what they're worth, and you have to pay people what they're worth because they'll go somewhere else. And you also have to treat them well and give them flexibility and give them upside and develop relationships, because I only work with people I enjoy working with. The people we don't enjoy working with, don't last long.
Is that where something like Standard Ore Corporation will come in? Because I was digging through your MD&A and I saw a related party transaction that you were paying fees in the size of about $10,000 a month, I believe, to Standard Ore Corporation within Ore. It was at the time Ore Finders, now it's Orecap. So is that where that comes in?
Standard Ore is basically, it's a private company that allows us, it's our operations company, it's our marketing company. It allows us to split costs, because in some instances you don't want to issue 6 invoices. So it's really basically our behind the scenes operation company that allows us to have lower unit costs across the group.
Okay. All right. Thank you, Stephen. I'll let you get a sip of water if needed here. And Gerry, now it's on to you, sir. You've been appointed CIO of this company. Why do you think you're the right man for that job?
Well, Antonio, my background is in money management for many years. Going early in my career, I ran the Inco pension fund internally, and so I've had a pretty steep experience in the mining industry over the years, not just at Inco, but also including many investments I've made in the sector, particularly the junior mining sector exploration. I also built an investment management firm over 30 odd years, where we managed pension funds, high net worth, including specialty funds in the resource area, particularly in the junior mining sector. So I've got a lot of relationships and experience and understanding of the industry, particularly the exploration side of the mining sector.
Right. And so why did you choose to sort of leave that career and go and do something else?
Well, it is I retired for about half a minute from the management business, and I wanted to continue on for two reasons. One, I'm not the retiring type, and second of all, I'm extremely bullish on the mining sector and the opportunities for here in the next few years, particularly because of the supply-demand situation on a lot of the commodities, so which we can talk about as we go along. But so that really made me look at the opportunity here and say that there's no time to be leaving the industry. And so I started a company called Stonegate Securities, and where I wanted to do advisory work for companies, as well as doing some investment banking to help finance some of the junior exploration companies, which in my view is the solution for the shortage of a lot of the metal commodities that are out there in the marketplace today.
Mm. So when Stephen, because I was talking to Stephen, he was telling me about you, and he said any issuer who's raising capital over the last 20 years or whatever, he said, would know Gerry. How come? I mean, what did he mean by that?
Well, I've when you've been in business as long as I have, you make a lot of relationships. A lot of these junior companies I supported from the very, very beginning. I have a lot of very, very good relationships, some of them going way back to Inco days, and some of the Inco people I dealt with way back when are still active in the business. And so it's a matter, this is a very much a relationship business. So, and those are very valuable things, especially in the junior mining sector.
Mm.
But when Stewart approached me with what he wanted to do with Orecap, didn't take me very long to say, absolutely, I think this is a great idea. I think it's the right thing at the right time. We have obviously some challenging equity markets right now, but I'm of the view that challenges like this create huge opportunity, and I think what Stephen decided to do with Orecap and convert it into an investment issuer is the right thing at the right time. Because there are many of the junior companies struggling out there right now and have issues to overcome. And I think one of the things that I think Stephen and I can help him with is creating some creative solutions around some of the issues that are presently confronting a lot of the junior mining companies right now. So I think it's a tremendous opportunity to move forward and create tremendous amount of value in the next few years.
What is it exactly that you're going to be doing for Orecap?
Well, first of all, bringing some of the relationships I have and knowledge on certain situations that I'm aware of. It's really broadening our reach, if you will, to look at a lot of opportunities. In this business, you have to look at many opportunities to pick one or two that you really like, and the more opportunities you can find, the better outcomes you're going to have by having a lot of choice, of which I think there's lots out there. So my role is really one, to introduce and bring to the table some of these opportunities. Two, to take a look at and analyze which ones make sense for us to pursue, and three, to follow up with these companies and create a deal that is a win-win for everybody going forward. I think we have an abundance of opportunity here. One, because of the fundamentals of the industry and the shortage of a lot of these metals. Two, because I think there's a rather negative market environment, which is creating stress in some cases in some of these junior mining companies, which need solutions. And I think that between Stewart and I, we can certainly, and his team, we can certainly create solutions that are going to be very beneficial and create a lot of value.
You know, oftentimes, all the time, really, when I'm looking into a company, I would want to sort of know the track record of management, the track record of the key people involved. And it's easier with geologists. I guess it's harder with people from the investment side of the business. What is something from your past that you sort of champion yourself on? Like, what's a big success that you had that you noticed early on, or, you know, a success story that you can tell me, basically?
Well, there are several. I mean, I ran a fund which was a flow-through fund for many, many years, and just by the nature of investing in flow-through offerings, you come across a lot of junior companies that are the very, very essence or early stage of their life. And I can give you many examples of companies that I would support for 3, 4, 5 years, and with flow-through offerings that you know, really made the company, because that initial amount really got them started on the project, which turned into be something quite exceptional. One example is in the uranium industry, NextGen. If you look at NextGen today, they've got one of the premier uranium deposits in the world. And I invested actually in the predecessor company that actually found the deposit. And then in subsequent offerings, in the very early days of NextGen, supported them with a lot of flow-through offerings, and watched them develop that initial discovery to something which is quite exceptional today. And so that's a very good example of what what I've done in the past. And I've got many others, companies like that, which I supported, that have gone on to do great and wonderful things and create great deposits.
What about some of the less great stuff? I mean, we all have things that we, you know, maybe have regrets on, or wish that we would have done differently. What's something that, you know, a learning experience, if you will?
One of the things that in this business, and particularly in the junior mining sector, you have to be very, very careful about is, and it's not getting carried away when things are really going well. Because when you've had a nice 2 or 3 or 4 year run, all of a sudden, you know, the valuations aren't quite there. The promoters get more involved in the industry. You get a lot of situations where you're investing at times when it's not particularly right. And so you have to be more and more careful. Today, however, investing in a negative environment like we have today actually is a lot easier, quite frankly, because you can be more discriminatory in terms of what you're investing in. The valuations are quite compelling, and you don't have a lot of promotion, if you will, in a lot of these junior companies, which you typically get when after a good run. So my only advice to investors is be careful about staying too long at the cocktail party, if you will, after a good run in the market. But that's not the case today. Today we have, I think, tremendous value. We have some great management teams, and really what's happened here in the last few years with the lack of investment in the mining industry is that we have a consolidation of some great assets with some great management teams, which are not being valued properly in the marketplace. And that's where I and I know Stephen are very, very excited about the opportunities we see there.
It's funny you should say don't stay too long at the cocktail party, because from my brief experience going to conferences, junior issuers and their management teams, they like overstaying their welcome on cocktail parties specifically. But it's a good point. Talk to me about yourself as a person, though, Gerry, beyond the years and years of experience as an investment advisor and a finance professional. What do you do in your free time? What do you like? What do you not like?
Well, I'm an avid golfer. So I just like to say, like, my business is like my passion, my recreational passion. I like difficult things. I always say about the golf swing, there's 165 things that can go wrong with your golf swing. So it's challenging all the time. But when you hit that great shot, it's a wonderful feeling, and it's not unlike the investment business. There's multiple things that can go wrong, and you have to be very careful in how you set yourself up and how you manage and how you strategize what you should and shouldn't do. And when Stephen and I first met and had a very frank conversation, I think I asked him, well, what things do you like to see? And we talked about that. Now I said, now more importantly, what don't you like? And it's what you don't like or you have to avoid is probably the most important thing about investing, as it is with your golf swing. So I'm very passionate about golf. I'm very passionate about the investment business, particularly the mining sector. I'm married, have 2 children. Our daughter's just about to get married in September, so a very exciting time in our family. And but we live in the country and enjoy it out here, and that's another passion I have of getting in my gator and going around trimming trees and making sure the forest is healthy and things like that. So those are the things that I get up morning for.
Congratulations for your daughter's wedding. Hopefully she's not marrying for a junior issuer.
No.
Where do you last question, I guess here, where do you want to bring this company? Because it's a complete new vehicle. It's interesting. There's nothing really to compare it to from the past. Where do you want to bring it to? Like, what's your vision, I guess, for this company, as vague as that may sound?
Well, if you go back in time, 15, 20 years ago, there were a number of merchant banking houses that were very, very active in the mining sector. There are very few, if any, today. So I think this is a tremendous opportunity to start a new business at the ground up. And I'm a great believer that when you start a business, the very best time, you look statistically, the very best time to start any business is in the depths of a recession, because there's nothing but upside. And I think that's the situation we have with the junior mining sector today. So I don't know where this could go. I think it could go very far, a long way, and create a lot of value. It's hard to really define what that might be, but all I think Stewart and Stephen and I know is that we are at the beginning of something which will have a long run, and I think that where that run takes us, it's hard to predict. But I think with some discipline, with some focus, we'll find our way to create a tremendous amount of value. And that's what we're really here to do.
All right. Thank you, Gerry, for that overview. And Charles, it's on to you now. And I guess let's start you off nicely here. Tell me, who are you, and what do you really have to do for Orecap? And also talk to me about why you think you're the right man for the position that you've taken on.
Okay, thank you very much, Anthony. So my name is Charles Beaudry. Obviously, I'm a geologist by profession. I've got a master's degree from McGill University, way back almost 40, a little over 40, yeah, about 40 years ago. And my history, or my trajectory has been, I spent a large part of my career working for large companies. Particularly, I spent about 18 years with the Noranda Group. Ended up going to Brazil. I was country manager there, staffed the office. We did a lot of entrepreneurial work. And I came back in 2001 We created quite a bit of value in Brazil, about maybe $500 million in value as declared by Xstrata when they bought Noranda. So it was good. It was a good experience, very successful. So I came back to Toronto, a bit of a rock star for Noranda, as you can imagine, after doing what I did. And I took on a more technical job for Noranda at that time. I was the manager of geochemistry, so I was involved with all of the aspects of QA/QC and all that stuff. And I did that basically until Noranda was taken over by Xstrata, except for I was seconded to the Frida River project for a year and a half in Papua New Guinea, which allowed me to get experience on this advanced project, and it was a lot of fun. It wasn't easy, but it was a lot of fun. And then when Xstrata took over the company, my interests were really in exploration. There's always been exploration. I'm a project generator by temperament and by experience. And this project, this Opimiska project, the concept of it was my brainchild. I am the one. There's nobody else basically that recognized in this project the potential that it had to be an open pit, and so I took it on. I convinced Stephen to make a deal, and the rest is history. Now, how does that fit into Orecap? Well, it's because of my experience, my broad experience, both international and in Canada, but also in different commodities. It gave me the opportunity to have a very broad exposure to different rocks, different deposit types, and also to be able to integrate that into economics. So my interests are really sitting at the boundary between geology and mineral economics, and so that positions me as Stephen's right-hand man on the technical aspects for projects that he's looking at. So invariably, when Stephen is introduced to a new opportunity, typically one of the first things he does is turn to me to see what I think of it. And typically, my reaction is two-staged. The initial reaction is more of often is a blink type reaction. Okay, I look at it very quickly. What do I feel about it? Do I think this could work? Do I think, is this hopeless situation? And then if it's good and Stephen agrees, then I'll have a more deep look at it and they decide whether the value, what kind of valuation we could put on the project to position Stephen for the proper negotiation to acquire it, if that's the decision that's made.
Right.
Okay. So this transcends the QC Copper, it transcends the Opimiska project, but it covers the whole group. Covers the whole group. Okay. And I co-founded most of the companies that are involved.
Okay. Well, this was a good overview. Thank you, Charles, for that overview of yourself. There's going to be a full overview for everybody listening on the Orecap website to hear more about Charles. Let's now do an overview of the properties that Orecap has today. So you have, as far as I understand it, 4 gold properties in Canada, so of which 3 are in Ontario and 1 in Quebec. I guess one of those is like on the border between Ontario and Quebec. And then you have a grassroots zinc property in Alberta as well. I know you have that investment.
Yeah, that's another of my brainchilds.
Okay.
That's a project that I generated even before being involved with Stephen. Okay.
But what's the focus here of these projects? Like different projects, different.
It depends. There's all kinds of different metallogenic models. That's been my strength since the early days. I was a senior research geologist for Noranda when I was working in the Abitibi, and I was involved with the discoveries up in the Troilus Greenstone Belt. The Tortigny VMS deposit was my discovery, and so I was involved in Matagami. I was one of the senior geologists in Matagami when we had all the successes in discovering the VMS deposits there, whether it be the Bellelard South or the Orchan West or the Perseverance. I wasn't directly involved, but otherwise I was involved with a lot of discoveries in the Matagami camp with the team. Right, I wasn't primary mover, but I was always there looking at the stuff, and because I'm a generalist, and I can cover a lot of ground in as you realize, right? I cover a lot of ground.
Yeah, you're also not the main geologist for Orecap. I mean, in terms of exploration, I think, because you have Jared on there as well. I don't know how, and Antoine. So I don't know how.
Yeah,
close
well, I would say that I'm kind of I'm not in the direct reporting chain of command for either ore finders. Well, that's Orecap now, but previously ore finders, Mistango, baseload energy, metal energy, or American Eagle Gold. But I do follow what they're doing, and as soon as I can deliver the MRE on Opemiska, and we can make, and as soon as we can make a decision on moving forward, probably with a PEA, preliminary economic analysis, then that will probably liberate me for doing more work on the generative side and also on the evaluation side, because we're starting to get a lot of proposals coming in, and now with Orecap, because of the financial aspects of that company, we're getting more advanced projects coming in. So we need more brain power to evaluate these things. So that's where I'd probably be more involved in the future. Going forward.
Okay. So what project do you like the most right now? What does your nose tell you?
Well, QC Copper is going to be a winner. In my view, it's going to be a mine. It's going to make.
No, but I mean, like within Orecap,
the NAC project in BC is a very interesting one. First of all, because it's porphyry, right? It has it's porphyry copper gold, and it has a lot of the earmarks, and so NAC is this thing that is challenging, but it has the potential of size, and Teck has basically gave us vote of confidence in the deal that we just signed with them. So it's going to be, it's an ongoing concern. What is it going to look like at the end? I don't know. That's too early to say, but it's good. It's a good project. And then of course Mistango's got Goldie, right?
Yeah.
Yes, Goldie is that's okay. What I'm going to tell you about Goldie is may surprise you, but when I look at Goldie, you know what it reminds me of? It reminds me of the South Mine Complex in Kirkland Lake. Okay, the South Mine Complex sat there for 100 years before being discovered, and why? Well, because it wasn't part of the paradigm. Okay, in the Kirkland Lake camp. What you're dealing with at the South Mine Complex is you have these two major structures. You have the Macassa structure to the north, and you have the Cadillac Break, or another structure parallel. I can't remember the name of that one. It's been a while. But in between the two, you have all these transfer faults that go between the two, and a lot of them are flat lying. And it's this accommodation between these two big structures that produce the amazing South Mine Complex deposit. And we're looking at something that we think may be analogous at Goldie, where we have the Delta Resources deposit, or not deposit yet, but the mineralized zone on the south side, which is steeply dipping. And we have some structures to the north, and in between we're dealing with the Temiskaming type sediments, just like at Kirkland Lake, with a lot of intrusions, a lot of porphyries, mineralized porphyries, just like at Kirkland Lake, and we're seeing flat-lying structures that are kind of coming through. Yet at Delta, it's all steep, and we're dealing with flat-lying. Why do we have flat-lying structures there? So this is an interesting question that needs to be answered, and that's what we're working on right now. So that's I think Goldie's got a lot of potential.
Yeah. Well, when I look at some of the physical properties, also though, that because you're mentioning a lot of these things that have potential, and that's making me think about the physical properties that Orecap has, which is the Knight property, Mirando, and McGarry property. They're surrounded by behemoths. They're ranging anywhere from 43 million ounces reserves at Timmins Camp, 13 million ounces at Horn, 10 million ounces at Kerr, and a couple of smaller ones, but still in the couple of million ounces deposits. And so sure, I can see the potential there too, but how did they end up in your hands? Like why were you able to pick them up? Why weren't they scooped up before you by the big boys who already had the other big projects there?
Timing is everything. Our whole group started out with Mirado. Okay, it was ore finders existed previously. Okay, and it was we had Alex Stewart, Stephen's dad, who does a lot of legal work for us. Is brilliant lawyer. He was involved early on with and Stephen. Well, there was a change of management in ore finders. Stephen became the CEO back in, I guess it must have been 2017 or something like that. And so that was the start. So we had this Mirado project. Mirado is interesting. We haven't done a lot of exploration, to be honest, on Mirado. I think there's room. I've had ideas. I've made proposals for exploration, but timing and money-wise, we didn't have a lot of resources. Meanwhile, we had these opportunities that came up. One was there was the opportunity with the Creso exploration that had gone bankrupt, and they had this land package in the Shining Tree district, and Alex acquired it through the bankruptcy, acquired the land package privately, and then flipped it over to ore finders. And shortly after, there was the opportunity to get the McGarry project through a bit complicated story, but in the end, it was what was the name of the promoter for Trelawney?
I don't know.
Yeah, what was the name of the guy? Yeah, I'm trying to remember. Anyways, he had this project and he was looking at it, and they ended up with a project in Arizona, and they decided to refocus there. So they had this thing as a bit of a orphan for them, and there was some environmental liabilities associated with it. So it made a deal for us. We through Alex, we actually were able to negotiate with the government a stay on a lot of the environmental stuff, and come to an agreement with the government on how we would proceed on McGarry. And so we ended up paying for McGarry a modest amount in shares, which has the armistice mine. There's the shaft there, and some infrastructure. And we could talk about the exploration potential there, but certainly the location is right next door to the Kerr Edison, and the Kerr Edison mined 11 million ounces. So I have some pretty clear ideas on what's going on there, but that would be for another discussion. Then there was the opportunity to acquire Mistango through a boardroom fight. Essentially, it ended up being because we made a deal with Osisco Royalties, whereby it allowed us to get a large chunk of Mistango, which then we parlayed into control of the board, and Mistango evolved from where that included the acquisition of the Hinterland project, which we bought those claims from Hinterland Exploration, which is on the north side, on the western extension of the west of the South Mine complex in Kirkland Lake, and because Mistango had already in the company, they had the Goldie and the Sackville projects in northwestern Ontario. So that's in short, that's the history of those companies. So Stephen has shown very canny ability to make the deals at the right time. That's the key.
All right.
And me advising him on the technical aspects of these things.
All right. Well, Stephen, I guess back to you now. What Charles is talking to me about here is your Canadian assets, but you've recently again taken a rather large position in an African project, the one held by Awale Resources. And full disclaimer, non-confession, I'm an investor in Awale too. Are we going to be seeing more of that? Like, is Awale a one-time thing because you think it's a good opportunity, or are we going to see you around the globe?
Well, first and foremost, my focus is Canada, no question about it. Why would I go anywhere else when I have a huge landmass, well endowed with metals from, gold to uranium, O to U, if you will. And then I understand the landscape. The First Nations. I don't know all of them, obviously, but I have a lot of experience in dealing with the First Nations and understand the culture and the differences and the challenges. We understand the geology. Obviously, Canada's a big place, has many different types of geology, but all else equal, we know it better than we know Mexico's geology. The politicians and the infrastructure and so on and so forth. Canada's, I think, although it has its challenges, and it has its risks, and there is no, top tier jurisdiction because, again, if you're coming from Cote d'Ivoire and operating in Canada, you're going to be, handicapped in a sense. Mm-hmm. And so that's why, again, we focus on what we know, we stay in our wheelhouse, and all else equal, I love Canada. That does not mean that there isn't opportunities elsewhere. And you cited Awale, which is, again, I've never done a deal in Africa. It's actually the only continent I've never done a deal on until now. And that was a unique opportunity. That was an opportunistic. It was brought to me by, I guess it's somebody as well, a fellow shareholder in QC Copper, and had been a supporter, and is actually an individual who's got a good nose for bird dogging opportunities, and put this in front of me, and I quickly got it. And then I quickly came up with a plan. I put it before their board. It was absolutely critical that the team, short of the CEO, who was part of the problem, was removed. But the team below him, who I thought were high quality, stayed in place. And so in this particular instance, I'm not a part of the operations team. We are investors. We have a clear plan in place, but we expect the Awale team, led by the new CEO, Andrew Chubb, to execute. And Andrew's actually in Cote d'Ivoire right now, so he spends a lot of time on the ground. He's been there for years.
He's also being promoted from within the company, just as I know that people want to know where he came from. He was the ex-COO of the company, which I really liked, just as an in-between.
No, it was absolutely key. I mean, it wouldn't have been an attractive opportunity to go in there and replace that team because, I don't know who knows Cote d'Ivoire. It just so happened to come with that baked in. Excuse me. But the issue with Awale was twofold. It was leadership. There needed to be a leadership change. Without that change, there was no interest from us. And then they needed money. And the money served twofold. One is they needed the money to operate and turn themselves around. And we needed the money, or we needed to invest the money in order to get the upside and to sort of have some sway and to be able to, I don't want to say command, but request that a very clear plan be put in place. And I found that the board, led by Robin, to be very motivated. Once they found that there was an interested party who had the ability to finance and had a clear plan in place and relationships, not just to invest. Like, we're not going to be passive investors. I'm going to be there. I'm going to be there advising them. I'm going to be there helping them to raise future rounds of capital. Excuse me. I want my hands on that company. In fact, I'm joining the board. But my point was, I found the board to be very amenable. They are motivated to turn this thing around. They know what they have, and we know what they have. And frankly, Newmont knows what they have. Perhaps most importantly, Newmont does not get out of bed for less than the potential of 5 million ounces, because 3 million ounces does not move the needle for that behemoth. So that's just representative of the type of opportunity that they see and that we see. We are chasing an IOCG, which is an iron oxide copper gold system in Cote d'Ivoire, which is one of the better places to do business in Africa, no question about it. But it carries its own risks, and it's awfully similar. While our guys don't have a lot of experience in Cote d'Ivoire, we have a lot of experience in the Carajás in Brazil, and that's where big IOCG projects are. So when we saw the geology, we saw the rocks, we talked to the team, we got it quickly. And in fact, Charles spent the 90s in the Carajás when that was being developed and worked for Noron. So he got it instantly. And Charles wrote a check for $100,000 personally. I wrote a check for $150,000 personally. So, we are putting our money where we also put Orefinders' money, because I want a piece of it directly. I think there's huge upside potential here. We invested in Awale at a very attractive valuation, pre-money, $3.5 million. for a company that has a JV and Sandstorm as well as Newmont as their largest shareholders. Newmont is spending $3 million of their money on the ODN project this year, so there's going to be lots of news flow, starting with the turnaround news release, which is coming out, any day, any minute sort of thing. So I have high hopes for Awale. Now, I mean, what's the investment proposition from Orecap's perspective? This could be a home run. That's a forward-looking statement, Antonio. This could be, I mean, look, if we are all right, this is a real an economic IOCG system. This is a home run. It will go down as a wonderful investment at a pre-money valuation of $3.5 million. Even if it's not a home run, I think I see 10x potential. So I think the floor is 10x potential just by turning this ship around, putting the right leadership in place, putting out quality drill results. Like, it's not grassroots. This has been drilled. Like, we're seeing really good results so far. There are multiple zones. They thought it was orogenic, meaning, just sort of typical gold and vein systems. And then they found another zone that had this copper and a huge copper anomaly in tills. And then they drilled it out. They're getting long intersections. They haven't gone deep on this thing. It is earlier stage. It's not a developed project, but it is. And then they have the whole district, which is very important to note that of this project, the ODN, ballpark, Newmont only has the JV on 50% of it. So the other 50% is wholly owned without any encumbrances by Awale. So if we can leverage Newmont's investment to prove that this is an IOCG in the new IOCG district, where leverage that money. We have other projects or other ground. As I said, 50% of the ground, the whole district is controlled by Awale. So it's really a leveraged play. It's an opportunistic play by turning around the management team, funding them, and then again, if all boats rise, this thing could be easily 10x with the right people, projects, and a little bit of promotion.
We're going to be talking, because that's one of my P's too, promotion. I guess with this answer here, we hit on two things, which is the plans and the place in terms of jurisdiction. Talked about Canada, talked about the rest of the world. Plans as to what you plan on doing. That's clear from what you've told me so far. So I want to talk about the promotion, but I also want to talk about the problems. And that's sort of the most fun part, at least for me, I guess. The problems is because, and I guess let me start off softly. Starting an investment company in the midst of a possible recession, if you believe YouTubers who put flames in their thumbnails, maybe even the end of the world, or just a looming bank crisis and interest rates, that have gone up 500 basis points in a little over a year. Challenging situation, to say the least. Doesn't that worry you to start an investment company in?
No, it's the best time. You got to think. You don't want to start an investment company when things are frothy. You want to start an investment company when things are terrible. That's been the mantra and the philosophy of the Ore Group. We got into uranium when it was $17. Got into copper when it was sub $2. Been in gold, long before I can remember the price. But that's the whole. We got involved in nickel when nickel was $4. So I mean, that's the whole philosophy. Is buy things when they're cheap on a cyclical basis. I'm very cognizant of the macro environment, and that's where we sort of take our bets. So I love a crisis. I mean, not to be cliche, but blood on the streets, intestinal fortitude, patience. Those are opportunities you invest in. And so it's counterintuitive which is very strange because everybody loves to buy the stock that goes like this. People buying PMET, for example. What a success story. What a great deposit. We'll see. But you should have gotten excited at 20 cents, but people are frothing at the mouth of $16. And I'm like, well, look, it may be a deposit, but I missed it. And so, that is our philosophy, is to sort of make actions, do actions, execute things when people are disinterested, because I can't afford to buy a riskless, flawless project because there's no value to be made.
Very well said. If you don't get that done, invest in engineers. Very well said. So it's a good time for companies to prove themselves of lower quality because they might raise capital at the wrong time, not manage balance sheets, overspend on promotion and G&A while not drilling because they want to save the news releases for a good time, and on and on and on. So actually, while I'm mentioning this, as you're talking to me about these things, my inner marketing geek sort of wakes up, and it's making me think about how you even market something like this. So this is a good point to move to one of the last piece, which would be the promotion. What's the promotion strategy here, and what kind of investors are you really trying to get the attention of?
Well, I mean, let's break down. There's three sort of types of investors. There's the retail investor who I'm investing my resources, time, and money with somebody like you to help us reach and leverage your audience, who I think you've done a marvelous job at developing an audience through resource talks and other initiatives you've done. And so much so, I hired you to do or Day, which is something we developed long before I met you, but the idea came for you to host it, and I think you did an amazing job. We had 10,000 views on YouTube. That's nothing for you, Antonio. That's a really big deal for us to have 10,000 eyeballs. Like before, 10,000 people heard about our group for a negligible cost. I remember the days of dog and pony shows, lunches, dinners, road shows across Europe, which still have their place, but less and less so when I can do a video. And I can scale it and communicate directly with all these people. And these aren't just people that are out there looking for a roast beef sandwich and a glass of red wine. They actually are investing 10 minutes of their time to hear me with nothing to gain other than potentially some information. So I think that we have, and if you go back on our YouTube channel, and you'll see me in my apartment probably 5-6 years ago, doing videos, and it's pretty funny to look back on it, but we were early on the video thing. Nobody cared. I think we probably had 37 views, and we thought that was great. But that was us trying to scale and use the internet before anybody was doing it. We were trying to do video news releases. Nobody was doing this. Really, we were amongst the first. Maybe not the first, but we're certainly amongst the first. And then COVID hit, and then boom. And so, this medium of communication is still nascent, and we're still trying to figure it out. But like things like Day, partnering with people like you, who I like, I like you too, and I think your philosophy about this industry and who you want to interview. You just don't interview anybody; you interview good people, so you, like I, like to work with good people. So, and you have an audience. And it's very important. You're not telling the story. You're not telling our story, Antonio. We are. We're just leveraging your distribution and your eyeballs. That's what I like. We also do social media. We've got, a lot of followers, etc. I don't know if that really moves the needle. I don't think it hurts, but I don't know if it's absolutely critical. But the most powerful medium for me is our YouTube channel. That's something that we like to invest in because it's a calling card for us. It's easily accessible for everybody, and people get to hear directly from us. And then, of course, so that I didn't finish, but so that's the retail. That's how we focused on retail. And then there's the institutions and how we market to them. That's a little more traditional. Sure, they use YouTube as well. They're just people. Oftentimes, they're also retail people, but sometimes these people run big multi-$100 million books. That often is facilitated through the banks, the dealers. The investment bankers, if you will, of which we've got relationships. I don't say with all of them, but a lot of them. That's something that's been very important to me, is developing relationships with those guys who provide access. They are gatekeepers to the institutional world. Very important. And then the third aspect is the strategics. Tech, Cisco, Agnico, Newmont, all those relationships, people that we've done deals with. Those are other sources of capital. So those are three sources of capital for our industry, and they're all a little bit different. They all, not everybody has access to them. And most in our industry just have access to retail. Few have access to institutional. Even fewer have access to strategics.
Well, what's the budget for that? Like, is there a whole budget for how you market to all three of those groups, or how do you look at it?
We don't necessarily set a budget and look to execute it like that. I mean, we were opportunistic, and when an opportunity comes our way where we see value, where we can spend 10 grand and we see we could make 10, 20, 50, 100 grand, we will take that opportunity. I would say so I don't have a figure for how much we spend on marketing, especially if I ran one company, I'd have more specific, but we run so many, it's hard for me to sort of aggregate the cost or say it individually. But it is important to invest. But in the IR business, traditionally 90% goes away. and never to be seen again into the ether. And so that is part of my philosophy. So we're very careful about how we spend our money, and we really want to see a return. We want to see metrics. I think that's important. And in your world, that's often associated with views or likes. I don't know if that correlates to share price appreciation, but at least it's something that is quantifiable and tangible. So, but really, it's about ideas like just the traditional IR business is ineffective, to say the least. I think IR 2.0, which is really about digital communication directly with the CEO, is where it's at and where companies should focus their investments.
I've got 2 more minutes to ask this question. So patience sounds like a weird P to have in a research framework, but this just sort of refers to the timeline. How much time do you need to make me money on this investment?
Well, I'm an extremely impatient person by nature. You can ask my wife, but I do approach things with patience. I think, in fact, this very question was asked not too long ago. I think it would be naive for us to expect returns in less than 12 months in any particular investment. I mean, you don't want to expect things to happen right away. Things take time. Not only to enact and be implemented, but they also take time for people to realize them, appreciate them, and make the investment decision. So, you have to, at minimum, you have to expect, a 12-month time horizon. Can we get lucky? And could it happen earlier? 100%. It could be 30 days. I mean, it could be instantaneous. You just don't know, but you can't bank on that. So you have to approach these things, again, just pulling a date out of thin air just because it's a nice round figure, 12 months. Sometimes they take longer. Sometimes you can get some tailwinds with the macro environment. If gold went to $2,500, well, look, if that happened in July, then we'd all look like geniuses. And the inverse is true. So I don't like to forecast price. I don't like to forecast timeframes. I like to emphasize patience and value. And value comes from the individuals and my ability to identify its difference between price.
I agree. Price would sort of be my last P, but we talked about that a lot. Where your enterprise value, if you compare your cash position and your marketable securities to your market cap, you're coming at a reasonable price there. So I think this was a good overview. I am all out of questions, but this begs for many more updates. Anything else you want to add here at the end, Stephen?
No, well, look, I'm excited to work with you and come back frequently. I'm really excited that this is a different approach, and that's what I like. I like to be different. I like to work with people who think and act differently. I love the fact we're introducing Gerry Brockelsby, who's our CIO. Gerry's an extremely experienced, knowledgeable guy. Relationships, has a lot of relationships. Probably financed every single CEO who's operating in Canada. Gerry's financed them. He's got the ability to raise money, which is, a critical factor in this business. I love the fact that very few companies introduce very few have a CIO, but very few introduce their CFO. But you're going to, I'm happy we're introducing Joel, because Joel is such a bright young guy and committed to the business. And Charles is such a genius when it comes to the rocks, frankly. And I know you know James, who's a part of our team. So I think it's so important to meet the people, our people, and hear directly for them, so that your audience can develop a relationship and hopefully some trust. And it doesn't happen instantly, and that's why I'm going to come back, and my colleagues are going to come back. We encourage your audience to come out and reach out to us. I'm easy to find. I respond to my emails and my telephone calls very quickly. And so I encourage people to reach out to us, get to know our philosophy. That's what we're trying to do here with you, Antonio. And so we're grateful for you investing your time with us.